Non-farm payroll just kicked off. Let's get started with today's session. A little bonus session for the poll report. Let's first begin with risk disclaimer. When it says risk in trading, please and always use trade capital only. Do not trade with money you cannot afford to lose. Whether you're trading stocks, options, futures, forex, cryptos, you know the risks. And if you're following me out there on social media, make sure it's the real me. You're here Mondays and Fridays for the live session, youtube.com/Chris Pulver. I also stream this on Facebook and Periscope and Twitch. So respective social media outlets, Real Chris Pulver. If you're sending me messages, I'll reply, but I will never send it first or solicit. So make sure you flag or report any suspicious activities because it's probably a bunch of baloney. All right. Nice to see everybody. Happy Friday. Let's get logged in. Let's check the channel. Say hi to everybody. Hopefully the usual suspects, right? And some newbies. Be nice to see some new faces, new names. All right. We're logging in live. Newbies. There we go. Derek in the house. Brad is here. Linda, good morning. Craig, good morning. David, good morning. Gary, Ranjit, Frank, Marilyn. Tarek, good morning. Luke, what's happening? Luke, you got a question for me today? Pound yen? Just kidding. All right, let's get to it. So non-farm payroll just kicked off. Let's see the numbers. I was looking for U.S. interest rate futures price in 92% chance of a 75 basis points hike for November, up from 85. Doesn't change anything. It's like, yeah, we know what the Fed was going to do. Raising rates, 75 basis points. Here's your Fed watch tool. So 75 basis points expected for November. Interesting. I'm actually looking at this change. It said 92%, but looks like the CME watch tool is a little bit lower than that. And then a 50 basis points rate hike expected for December, and another 25 basis points for February or March. It looks like February. So if we have another 25 basis points, that would be really the top, if you will, the top of the rate cycle, and that's going to make things really interesting. For what the Fed can do as far as the Fed wants to raise rates, is this their cap? One thing I'm going to have a discussion on for my other YouTube channel with Jared Johnson, Beyond Capital Group. If you check that out, hopefully all of you have seen it, watched a couple of videos. YouTube.com. Go to Beyond Capital. There it is right there, Beyond Capital Group. You'll see my face and Jared Johnson's face. So subscribe to that channel. We have a video coming out this week. Interesting data. We're looking at really the reality of energy. There's nothing that the Fed can do to stop energy. So, I mean, energy prices are going to be the stickiest of sticky of the inflation metrics. And food and energy, as we know, are the big reasons that headline inflation has remained elevated. And yeah, it's really the Fed can't raise rates enough to like squash energy, especially when you have forces like OPEC and OPEC Plus that are like, yeah, remember that 100,000 barrels we raised input or output? That was like 0.1% demand. Well, we're going to go ahead and cut 2 million barrels a day to keep prices elevated, and energy has soared to the point where I was looking at the sector tracker yesterday with my Equities on Demand students, and the energy sector is still the leader by far year to date. 48.54% energy. It's the only leading sector this year. So where's the best money? Where's the best money being treated? Energy. Oil, gas, storage, not green energy, okay? Oil, gas. So we have some exposure in that. We actually had a great Q1 because of this between energy and materials, and we're focused on probably a handful of plays on energy. So anyway, it's going to be, again, kind of a game of chicken. Fed wants to raise rates. They're talking it up like they're going to 4.5%, but they can't stop oil prices from going up. If we have a crisis, energy crisis in Europe, oil prices go up. If we have a global recession, that's what forced oil prices down. But if we still have demand, oil prices are going up. And the Fed, I think ultimately they're going to stop raising rates at some point because you can't service debt for longer than probably 6 months to 12 months at a rate that's like unsustainable. So anyway, again, I'm not calling tops or bottoms. We're clearly waiting to see what happens with, the DXY, the dollar index, which right now, 112.49. The week has had this look at that long wick to the south. So today's candle just pushing a little bit higher. The week pushing a little bit higher. I mean, we had what looked to be a correction, but this trend is still intact. Does this go until it breaks? 115 seemed to be a holding point. 120 might be the breaking point. So we'll figure it out. Tarek says non-farm payroll green 263 versus 250. Okay, average earnings. Let's take a look at that. Jan, good morning. Don, good morning. Moch, good morning. Rev, good morning. Let's see, what were the average hourly earnings? Was that better or worse? And the unemployment rate. See the numbers. Everything was green. So average earnings came in as expected. CAD came in better than barely better. 19.5 came in 21. Usually the CAD is way off, positively or negatively. Unemployment rate was improvement for Canada. Ours was slightly better as well. 3.7 expected. 3.5 came in. So there's your tight labor market. And yeah, I mean, look, until the dollar stops going up, the equities market's not going to see a bottom. That is the correlation I'm sticking with this year. So as we kick things off for the next hour before Wall Street opens, we're down to 370, which is looks like a sour open for the markets again. 370. Are we going to come back in? The good news stay on the dollar. Is that going to drive dollar strength, which kicks equities to the downside? Are we going to fill this gap around 370? Looks like we're opening right there. So if we open at the gap, do we use that to fill and buy? Is there some demand there, or are we just going to gap there and then push lower? Again, I don't feel like super comfortable that the bottom is in. I think things you have to watch. If you want to take some notes, I think this is important. A couple things to watch. So how do we see a sustained rally in equities? I'm just typing this in the chat. Okay, how do we see a sustained rally in equities? I think we need to see the 5 and 10-year Treasury yield top out. We need to see the DXY US dollar top out, and we probably need to see US oil, UK oil start to head lower. Inflation will be very sticky if energy prices go up. So if we see US oil, if we see UK oil, I mean, look at this. We had this entire week, 2 million barrels a day lifts prices. So we're back up towards 89.60. We're back up towards $90. I was telling traders this week that if we get back above $93, $94, this might be this subtle little break right here, right? Little channel, little compression. We get into open space around $94, $95. I think we're talking crossing $100 in the very near future. So I'm not sure what's going to pull this back down. I mean, what would be the force to bring it back down? The U.S. dumping more of its strategic petroleum reserves. Like we've gotten ourselves down to levels in 1984. So I just think the entire energy situation in the U.S. has been very, very poorly handled. It's mismanaged for years in the making. And here we are, dumping our 5-year reserves that we've had built up. If we're going to rebuild them, then we're going to do it at crazy high prices. And I just think it's going to be a failed attempt to see, like, look, the Fed can't tame everything with raising rates. The Fed can't crush. They can do whatever they want, but the Fed would be very silly to just squash the consumer in the U.S. and basically, tilt towards a global recession in order to try to tame energy prices, which are virtually untamable. So we're going to see how this plays out. But like I said, this seems like a game of chicken to me. Fed wants one thing, they're racing this way. OPEC and commodity-rich nations want another thing, and they're going to collide at some point. And something's going to break, and something's going to budge, and something's going to break and veer off. And I don't think it's OPEC. Clearly OPEC showed their cards this last week. If they want to cut production, they're going to do it, and energy prices are going to jump because of it. So, and then now the ball's in the Fed's court. What's the Fed going to do? Are they going to continue to raise rates? If so, this Fed watch tool will keep shifting. And we know that when that's happened, the market has hated it for the last 3 months. Every time we've had the Fed shift the target rate to go higher and higher and higher, the market's seen fresh lows. Right? So that's my point. All right. Yesterday was also a busy day. Let me bring up my notepad. So anybody that's in my Equities on Demand trading room, we have a lot to talk about today. I just went through every position. You're curious how much we're handling here in these trading rooms. I will show you. You're going to go through the list with me. I'm on it right now. So here we go. Starting A to Z. A to Z. So these are all the positions that I am in alphabetical order, expirations, what's going on, staggered credit spreads, covered calls, shares that I own, lots of them. So it was a busy afternoon just putting all these together, but this gives me, again, for my own peace of mind, knowing that I'm not forgetting anything, all the expirations, all the ownership is out in the open, and I know what to do. We did see a big removal for, I think there was like minor offenses or possession offenses. There was a big wave of legislation that's freeing up on cannabis. So like Tilray, a couple of Canopy Growth. Tilray is TRLY. I've had some light exposure in that one. Big jump to the upside. I'm still way off my break-even point, but I'm curious how hard this runs. Canopy, it's CPG. No, Canopy Growth. Yeah, CGC. That was one. Curious if this one ran up from lows around $3 up to 375. I mean, we had some big jumps. I don't know if this is sustainable or not, but I'll be watching this. It's up 23%. So there's some pretty big jumps on cannabis stocks the last couple of days. So, or the last 24 hours really. S&P going down 37.22. SPX we're 37.44. I mean, 37.22. That's a gap, right? 3,700 is our gap from a couple days ago from our Monday to Tuesday. Is that right? Yeah, this week, Monday to Tuesday, to kick off October 3rd and 4th, our Q4. So we kicked off with a nice little rally. We did leave this pretty obvious gap, so I could see the market, jumping back down to bump and fill that gap, and then we figure out whether this is, fill the gap and rally, or this is fill the gap and continue to slide lower. If you've been reading up on outflows, there's been a ton of mutual fund outflows, lots of redemptions. One thing that's also interesting is the pace, and it wasn't as bad as March 2020. But we are seeing a steady amount of redemptions, a steady amount of outflows from retail investors and from institutions. And if those levels continue to stay elevated, that also helps signal another bottom, because at some point it just shows that investors have given up. And then you typically, the market breadth changes. You have lower lows, but less companies making lower lows. That's seen as a bit of a divergence indicator. And at some point you just run out of sellers. So we could be, closer to lows if we take out these levels. I'm still pretty keen on the levels 340 and 240. 340 for the SPY, which is our pre-COVID high, 240 on the QQQ, which is our pre-COVID high, and I think the markets can both find them. Now, that is why when you look at something like this, I have so many credit spreads, because if there are stocks that I want to own, if the SPY hits 340 or the Q's hit 340, I'll be looking to kind of time those lows with some ownership and maybe flip and repair a few stocks for hopefully some bucks. All right. So that is that. Looking again. So we have 45 minutes for the open. This pre-market movement's going even lower. So 369 right now. We started at 370 when we started the session. So futures is dipping a little bit harder. Take a look at the Market Watch dashboard. U.S. economy gains 263. Smallest monthly payrolls expansion since 2021. Really? Haven't we been seeing like 200 plus thousand jobs for a while? I don't know. Whatever. They can flip it however they want. Futures. So on the news, you can see futures just took a nosedive. So Dow Jones futures down 0.22, S&P down 0.49, Nasdaq futures down 0.93. Gold, with the dollar maintaining bid, gold's dipped a little bit, but we're well above 1680, which was a big level that I was watching. Silver, is at $18. Now it's up to 20 some dollars. So I think both gold and silver, again, depending on the dollar. Gold is pulling back, but as long as we hold above this 1680 level, I think that's a good spot to look for a bounce. If we have a higher low on gold, I'm looking for a lower high on the dollar. Here is XAG. Pull back to 20.3. As long as we stay above 1950, I'm looking for a higher low here as well. So we did take out this recent high. There could be a nice little structure play in here with a bullish pattern. Again, this will be dollar related and dollar correlated. Oil prices, how do we close today? Does oil creep back up to $90? It's at 89.04 right now. UK oil. 95.04. Dollar index. Heading north. Yep. So we're coming back into this weekly pivot. Again, I have chart alarms set at the lows, chart alarms set at the highs to keep tabs on this dollar. We're coming back to this weekly pivot. Is that a resistance point? It could be. You know, could it be a resistance point? I certainly hope it is. 14, 15, 16 months, 18 months of trend in the dollar. It's kind of stupid. But technically speaking, I get it. You know, I've been saying this, like, I want the dollar to get weaker, but we might not see it really until, you know, the market can officially price in this Fed rate hike cycle, and it can price in where they think the top is going to be in the funds rate. If they can price that in, we'll see a bottom in equities, we'll see a weaker dollar. Until then, right now, I mean, you've got fixed income and cash that are just flooding US dollars. It's the central bank that's raising rates and tightening. Your 2-year, your 5-year, your 10-year, like wherever you're parking, looking for yields right now, you're getting them. You know, better than before. I mean, granted, you're still losing to inflation, but you're avoiding the volatility and the downside move that everything seems to be headed. Right till the war ends. Yeah, I don't know about that. I don't know. I mean, that could be ongoing too. I mean, that's another reason with OPEC cutting by 2 million barrels and energy prices going up. That's essentially funding the war, right? Supporting the war because like Russia's still exporting, Russia's still producing oil. So anyway, I mean, I'm not getting into that conversation, but that's why we have hedges. You know, we're hedged on the SPY with a bear call spread. I'm hedged on Apple to the downside with a bear call spread. We're looking at another gap lower, 141. Let's see if this can take out the lows. This is at 137. Let's see if we take out the lows here. Recent lows. I had to get a new keyboard this week. Said a sayonara for the one. It's been a few years on the one that I had. It's pretty awful. Very very sticky spacebar, and I couldn't fix it. So new keyboard. Feels nice. Yeah. So anyway, that's why we have hedges, and then also we're long. I'm long the VIXI, not the FIXI. Long the VIXI, and also long the VIXM. So these are playing out really nicely for some income, you know, to offset some of the pain of the downside. That's why we're in a bunch of options. What else do we have? You can look for some inverse ETFs. The SU, no, the what? I know the D is the dog is the Dow. That's the 1-to-1 leverage Dow, which is going up. I'm trying to think what the SVXY. I'm not sure what the leverage situation is on SVXY. That's not it. That's not the one. I'm in SVXY long. It doesn't matter. I've got inverse ETFs on my trading dock. But anyway, SVXY, I've got a bear call spread here as well. Covered calls at 51 bucks, and we'll just keep plugging away. Okay, let's check some currency pairs while we're at it. Let's see. So we did oil, gold, silver. I want to check copper really quickly. So copper trading at 3.4. Go to the higher time frame on copper. This is also one of my bigger plays for the next 6 to 12 months. Is copper done? You know, is this it? We just had this little commodity crash from June and it just stabilizes here, or is there another push lower? Find support, and then we have another really nice run on copper. I would love to be long on copper for this is a 100% upside. If we get down to say 250 and we run back up to the highs at 5.25, that's a nice upside potential there. So I'll be watching copper pretty closely. Also, I took a look. Semiconductors have been beat up pretty badly. Micron, AMD, Nvidia, they're all looking to open a little bit lower. Look at some levels here. Micron, we've taken a lot of trades on Micron and did pretty well. We traded this range in equities on demand. We traded this range in equities on demand. We bounced here. I'm glad that we did do some, not a risky trade, but we did a trade that would have been assigned around like 60 bucks. I'm glad we didn't do that. So we picked our battles pretty wisely on this one. But there's some pretty strong support coming in around $32. If it hits there, I set some chart alarms. I'd certainly be interested in buying some Micron around 32 bucks. AMD is advanced micro devices. This one's coming back into some pretty solid support between $60 and $45. Again, interested in those levels if we get them. High to low, that would be around 74% off the highs if we pull back into the mid 40s. Pretty interested there. And then everyone's favorite, Nvidia. NVDA is the ticker. This one also well off the highs. And if we settle back in, some decent support around 117. I happen to be way more interested if it's just going to implode down to like 75. So, I'd try to buy it on the cheap, so trading lots of options. Currency wise, let's take a look at everything. So let's go daily time frame. Okay. So Aussie CAD, I'm still long. Aussie Swiss, we can take a look at our currency strength chart for the morning. Things are fairly contained volatility wise, but we're getting some big jumps right around that news at 8:30. So our non-farm payroll, we're seeing the CAD, the dollar, the yen all jumping to the upside. The pound was strong; it's going right back to the middle. Very volatile pound since last week. The New Zealand dollar getting weaker as well. So yeah, that's what's going on right now as we come to the top of the hour. Aussie Swiss, I'm still looking to see if we fill a 6,000 pocket and then a pre-COVID test, maybe back around 5,400 or so, 5,450. So it could be a big picture move. We've already measured 6,000 and 5,750 symmetry on this one in case it continues to go lower. Aussie yen, we were looking for a little flag break and it looks like we have it. I'm just curious if any traders in my room were short. We're looking at this right here. If anybody was shorting, you had an opportunity to look to short at equal highs, short resistance, and see if you get a head start, in the smaller time frames, or you just simply play this break. This break, if we look for a break, a flag, and a go, there's still more downside here. And maybe Aussie yen, CAD yen, or Aussie yen, New Zealand yen. I think those are probably the safer ones to trade as far as, if we're not going to see a rally in equities, we're probably going to see a downward move in Aussie yen. So a lot of traders that, if you don't trade stocks or options, you like to trade currencies primarily. If you're looking to short the Aussie or the S&P, then you can short the Aussie yen. That typically correlates pretty nicely. Yep. So that's Aussie yen. Aussie New Zealand trading at 1350. I'm still short. We had a couple of tests of this 1240 level. I'm going to look to get back down there. Aussie dollar. I'm just waiting for a trend line to break. Where's my delete button? There we go. Looking for a trend line to break right here, this larger trend line. And something around like 6,000, and our pre-COVID levels are around 50. Let me check the weekly chart. COVID crash lows around 55. So this is a big area that, it's kind of a no-brainer support if I can get it. If I can buy Aussie dollar right there, I will be all over that. Okay. So looking, but if we break this trend line, sooner than later, if we put in some lows and we rally back up towards resistance around 67, we can just trade this channel. We've had a pretty solid channel play for the last, I don't know how many months. I mean, really since the top here in 2021. So it's been over 12 months on these dollar pairs where it's been dollar strength. In some way, shape, or form, you had a year trend plus on the dollar. CAD Swiss, we're up to 72.35. I'm still holding long in this one. I'm going to continue to hold long in CAD Swiss. CAD Yen, oil's getting bid, so CAD Yen's a little stubborn. We actually still haven't broken that BOJ intervention candle. This has been crazy. We have literally came to the pip, 4 or 5 times, right around 104.65. We haven't broken that low yet. I'm going to go ahead and set a chart alarm here at 104.50. I do have a pending sell at 104.30. It's a sell stop order on the CAD Yen. I'm going to put breaking lows on this chart alarm. So do we break the lows on this CAD Yen? If so, I'm looking for some aggressive, bear flags to the downside and try to target some of these previous lows and some exponential moving averages. Swiss Yen, heading a little bit lower. I would love to see the Swiss yen break these lows off the BOJ intervention candle around 143.50 and drop another, 600 or 700 pips to match the size of that candle. That'd be a pretty epic move. Euro Aussie, choppy. Profits have been protected this last week. Euro CAD pulling back. That's fine. Euro Swiss, anything inviting here? Not really a lot of movement. Euro Pound. Euro Pound, we're in a long position right now. Haven't closed out yet. My stop loss, did we get stopped out? I think I did get stopped out. 87.45, I got stopped out. That's annoying. Did we get stopped out? Let me check my flex stock. I think we adjusted the stop loss. I want to say it was like 87.45. Let me confirm. Maybe it was 86.45. What do we have here? 86.95. Okay. So stop loss is still fine. We haven't been triggered on it yet. Okay, that's fine. So we had the stop loss initially down here, bumped it up to 86.95. So the trade is still in, and I'm going to go after this weekly pivot and hopefully some more. That's Euro Pound. Euro Yen, this one's a stay out for right now. Although I was saying on the higher time frame, if traders are looking to short it, just have a stop loss above these highs. If you shorted equal highs around 144, it's working out so far. You're up a few hundred pips. Your stop loss has remained valid. Euro New Zealand, leave this one alone. Euro dollar apparently isn't done to the downside yet. We might even come in here and score a pressure point for the bears. I mean, look at this. It just keeps wanting to, maybe push and make lower lows. It's okay. Look, at some point when this gets a relief rally, we're going to squeeze like crazy. But if the dollar doesn't turn course, the euro dollar is going to continue to score points for those bears. We've already hit parity. We've already gone below parity. So now you're looking at where 20-year lows, 25-year lows. You go back to the all-time lows with the exchange that wasn't even when the euro was around. It's like 85. 0.85 is like the all-time low based on this exchange. So are we headed down there? That's the same as the euro dollar or the dollar index and the DXY going to 120. So we could be heading there. Okay. All right, euro dollar. Pound Aussie. Pound Aussie. I'm looking for the pound to do this. A lot of these pound crosses, if we have this massive flash crash low and high, do we settle back in and do we rally back up? Now, we might be looking at a trade where we settle in and then rally back to the highs, and that's a nice little range that traders can take advantage of. So we can look for some short-term opportunities there, and we may also stretch a little bit higher. So I'm looking for a higher low. Now we have a nice little pivot cluster there around 7,000 on the pound Aussie. So we'll talk about this more next week in Flex, but similar movements, pound Aussie, pound CAD, pound Swiss, pound New Zealand, pound yen. I'm gonna discount or exclude the pound yen. That one already had a beautiful level of support. It already sold off resistance, so it's just range bound for right now. But pound Aussie, pound CAD, pound Swiss, even pound dollar, I'm looking to see if we have a pullback and then a rally to the upside. Now that rally might stop at the same highs. That rally may get us up a little bit higher towards a 18127 extension for those of you that are familiar with Fibonacci. Pound CAD. Pound CAD pulling back, but same thing. We get a pullback to the backside of the trend line, then a rally back to retest the highs. That's what I'm watching for. Pound Swiss, same thing. Pound yen. Pound yen, way more volatile. I would still sell the pound yen up here. If we hit resistance around 168, I'd still sell it. If we came back down to this low or this low around 150, I'd still buy it. So this is a lot of, scalping in here for those that are interested in higher volatility. The pound yen certainly offers it. But as far as a position trade, resistance here and support here to buy low and sell high. Okay. Thanks, Donna. Yep. If everyone would do that, that'd be great. How many people are watching right now? Got 55 plus watching. Okay, good. Yeah. Let's see some thumbs up on this thing. Yeah. All right. Pound New Zealand. I was actually bummed on this one. We had a pending order at 83.55. The good till canceled expired at like 60 days. That trade would have been freaking glorious. I mean, 83.55 on the flash move. We probably would have been filled around 83.50, 8300. But I mean, we ran all the way to 2000. So that would have been 1,700 pips. Shoulda, coulda, woulda. But it was a good trade based on the weekly and monthly chart. Really strong support. We had a pending buy. I had a big yellow box on my charts to say this is a buy zone. And it was just one that I didn't keep, unfortunately. But that would have been a nice one to take advantage of that flash crash. But I did close out for a nice little chunk. Pending buy and pound dollar was filled, grabbed 400 pips there. Euro pound was filled, 400 pips there. Held some positions, took some non-FIFO trades. I mean, this week I've done a pretty good job clearing some pips. It was like almost 1,000 pips on my manual accounts, and between 3 robots trading, it was another like 1,500 pips. So it's been a pretty good week overall, capturing some profits the last 1 to 2 weeks, and yeah, just trading away. So here's pound US dollar. Pulling back towards pivot levels. It's going to be interesting to see if we have a higher low and another push higher, or if this is just coming back up to fill that 112 pocket and the dollar just remains the king of all currencies right now. We'll find out, and we'll talk about it more next week. New Zealand CAD, Aussie CAD. I'm still long on both of them, and neither one of them want to cooperate at this time. Not yet, at least. So I'm just going to stay patient on both of those. New Zealand Swiss. Looking at a potential bounce around the COVID crash level at 53.50. I'm watching that level closely. New Zealand yen. This one, if we sell back off and looking to find some support, not right now, but support in here or support in here with confirmation, not just buying it. I'm not going to buy it just to 80. We could bounce off at 80, but I'd have a stop loss there. Otherwise, we look for a trend line and we try to buy this nice and low at a major support level. Okay. All right. What's up, Craig? How are you, man? Good to see you. New Zealand US dollar, 56.27. Also looking left on this chart for I keep saying pre-COVID. It's not. It's a COVID crash. So this was around 5,500. We're close to getting there. I mean, that COVID crash on New Zealand US dollars right there, 54.85. So I'm looking at some potential orders down there and a trend line break. Dollar CAD, this one's been messy. It's at 37.25. We had strong news for both the dollar and the CAD today, so it's pretty much a mix and a wash. I'm looking at the higher time frames. You know, if I have to, I would look at selling this around 4,000 and around 4,600. You know, we just had this crazy breakout to the upside. I'm looking for channel resistance to hold and trying to see the dollar CAD head back down and respect this channel. We have lots of structure up here as well, lots of resistance intermediately around this 3750 to 4,000 level. But I'm looking for a trade around 4,000, you know, kind of area 1, area 2. I would add to my trades. I'm currently short from around 33.25 with a break even. So I will look to kind of manage everything on that trade. Dollar Swiss trading at 99.37. We're trying to creep back up to these highs. I talked to traders this week about potentially selling it at parity, 1.00. So if we have up, down, up, down, up, down, just a little choppiness, but watch the structure right here. I look for a sell stop. If we have a sell stop that gets activated, this could be a great trade. It wouldn't be the perfect entry off of 1.00, but if it fills, I think we could drop 300-400 pips to the downside and come back to 95. And the reason I'm not looking to short it right at parity is in case this is going to be like breaking up, breaking up, breaking up, breaking up, and it looks like a rising wedge, which would be great for a short, but then it goes boop, and it breaks those highs and blows through 1.00 and runs up to major resistance at 102. At 102, I will short it, especially if we have this wild, open, inefficient breakout. I will short it at 102, 102.50. Okay. So again, still looking for, you know, some type of final effort capitulation move, DXY, dollar Swiss, dollar yen. Speaking of dollar yen, right now we're trading at 145.09. We still haven't broken the BOJ high, which is 146 or so. So watching this stupid yen pair and these BOJ intervention candles really closely with a lot of chart alarms. All right. So covered all of our currencies. Big list of stocks and options to review today for equities on demand. It's Friday. Nice way to kick off the quarter. Closed out for some pips. Perfect Storm did really well for me this week. So here's Perfect Storm. Closed out for 330 pips. No complaints right there. Perfect Storm. I think this one is another one. I have two accounts running. 638 pips. So what was that? 330 and 638. Love both of those. And Pockets Pattern Pro was also 780 pips this week. Yeah, I mean, freaking great, man. Love these robots. So yeah, no complaints. I love it when robots do their thing. Make some nice profits, keep some income coming in nice and steady. I mean, that's what they're for. Trade the right currencies, trade the right environment, and robots do amazing things. But don't trade the right environment. Robots suck, right? You trade a trend robot in a range or a range robot in a trend, you're going to hate it. So that's why we do the work ahead of time. We test this on, you know, every currency pair. We test this on every environment, and we want to see what robots survive. So yeah, Perfect Storm, Pockets Pattern Pro are great robots. Price action based, support resistance, buy low, sell high, good equity management. So they work. They work really nicely. If anybody's interested, you can just go to the website, pulverport.com. A couple things. If you want to trade with me live, I keep saying this, but hopefully it'll stick one of these days. Free newsletter for top weekly picks. You go into systems. All the systems I'm talking about, Perfect Storm, Pockets Pattern Pro, Price Action Pro, Right Trader. You know, if anybody's interested in automation or indicators or education, all this is here in these classes. If you want to trade with me live, my 2 trading rooms, I trade a Forex room, which is Flex Trading Room Tuesday, Wednesday, Thursday, and Equities on Demand Monday through Friday. We trade stocks options. We can get rid of cryptos. We don't really trade cryptos in this. We do have crypto exposure. We trade Web 3.0. We trade blockchain, but we treat that it's a stock. Right, we get in stocks, we trade option around those stocks, but it's heavy stocks and options, heavy Forex. You can get a trial for $27. So $27, you can trade with me for a full month and make a decision if you like it. But helps a lot of traders and helps me. You know, we make good decisions and we keep grinding. Okie dokie. Bill says just got lucky. Was on the right side of the euro dollar for 90 pips. Better rather be lucky than good, Bill, as they say on the golf course. Speaking of golf, it's going to be freezing tomorrow, but I'm playing golf in the morning. Why? I don't know, because I'm silly. So hopefully there's sun's out, no wind, and there'll be gloves and hats on for sure. Cart cover, maybe a heater. But anyway, all right. Any final questions? Any charts? Anything you'd like to review? I feel like I'm talking like the Micro Machine Man, but that's what happens on Friday. Haven't even had my coffee yet. All right, good stuff. If you do me a favor, real quick, for everyone watching, hit that thumbs up button for me. Support the YouTube algorithm. I appreciate it. Channel likes it, and let's grow this channel. You know, we were at zero subscribers like a year and a half ago. Now we're at 5.36 thousand. Love it. So let's get to 10. You know, spread the news. Pass these sessions along. Free education Mondays and Fridays. Keep it seriously simple. Trading 101 video series. I mean, it's not just live sessions. There's plenty of education to go around too. And also with my Beyond Capital group with Jared Johnson, we're doing a lot of great content there as well. Just interviewed Tom Sosnoff last week. Most likely in the next couple weeks, I'll be heading out to Utah for the rest of the year. So it's a fun little transition for right now to get out there and work with a hedge fund. So good stuff. Can't get cold. My tropical plants are still out in Ohio. Man, what are you growing there? You got a pineapple tree? Avocados, oranges. Anyway, all right, everybody. Happy Friday. Equities on Demand students to see you at the top of the hour at 10 o'clock. Have a great Friday, great weekend. I'll see you back here on Monday for more Pulver Report at 9 a.m. Eastern Time. Okay, thanks, everybody. Have a great weekend. Bye.